It's a bigger problem than what we had in 2000 or 2008 or 2020 with COVID. Where we are now is, the problems are much bigger. But I think the significant difference is that inflation is at a level that no longer allows the Fed the luxury of being able to, rescue the markets or the economy by printing money and slashing interest rates, because that actually is inflation. Mm-hmm. If you understand, the Fed's solution to every problem has been inflation. That's what the Fed does. It creates inflation. Inflation is the expansion of the money supply. So the Fed inflates every time there's a problem, and it inflates our way out of the problem. But when they do that, they actually prevent the problem from really being solved. They just kind of kick the can down the road and let the problem get worse. But at this time, because the Fed has already created so much inflation, and what gave them the leeway to be able to do that and the pretense, they kept pointing to the CPI, as flawed as it is, mm-hmm. and they said, hey, inflation is below 2%. That's not good. We need 2%. That's our mandate. And so we can print all this money and stimulate the economy, because it kills two birds with one stone. It can help us revive the economy and stimulate growth. Plus, we can get up to our inflation goal, which is, we need to get up to 2%. Well, that was always BS. I mean, we don't need 2% inflation. I mean, 1% inflation is better than 2%. 0 is better than 1. -1 is better than 0. Prices going down is a good thing. It's not a bad thing. It's a good thing. It's good for everybody. It's good for business. They sell more products. It's good for consumers. They can buy more stuff. Everybody wins when you have falling prices. But the government, manufactured that lie to make an excuse. But now that inflation is way above 2%, they no longer have a pretense for creating more inflation. Clearly, we don't need more inflation. Inflation is too high. And so that takes the Fed out of the game. Now we get a stock market crash, we get a recession, we get a financial crisis. The Fed can't do anything. And if the Fed can't do anything, the government can't do anything. Because where does the government get money to stimulate or to bail out? From the Fed. Mm-hmm. Well, the Fed's not giving the government money anymore. In fact, the Fed is actually billing the government. A lot of people don't realize this, but now that the Fed is raising interest rates, it's losing a ton of money on its $9 trillion balance sheet. But while interest rates were at 0, and they had this big balance sheet and they were collecting all this income, they were making money, and so they were sending Congress a check, a lot of money, which helped offset the deficits. Now the Fed is losing billions, tens of billions, soon hundreds of billions. They're sending Congress a bill. The Fed needs a bailout from the U.S. government. So, this is the very different situation that we've been in. This is the end game, right? The end of the road. This is, where we pay the piper. Hey, look, Donald Trump, when he ran for president, said some things, like this, criticized Janet Yellen and the Fed for inflating a bubble and keeping interest rates too low and creating a phony economy. So he was good at pointing out those problems when he wasn't president. But of course, when he became president, he wanted Jerome Powell to do everything that he criticized Janet Yellen for doing. Because once he became in power, he recognized that if the Fed did the right thing, we were going to have a massive economic implosion, and he didn't want to get blamed for that. He wanted to pretend that he presided over the greatest economy in the history of America, so he could pretend that he made America great. He didn't make anything great. I mean, he made our debt great. I mean, it made it greater. Donald Trump ran on a platform of shrinking the trade deficit. We had record trade deficits under Trump. Now, they're bigger now under Biden because Biden has already broken Trump's record, but Trump broke Obama's record in trade. So trade deficits got bigger, budget deficits got bigger. The bubble. And what did Trump want? He wanted 0% interest rates. He wanted negative rates. He wanted quantitative easing. So he became a champion of everything he criticized. So it's very difficult for anyone in government to be honest with the American public because, the voters really don't have the intellect for honesty. They don't have the attention span to be told the truth about how bad things are. So everybody wants something for nothing from the government. They don't want to hear, oh God, you're gonna have to suffer. This is some bitter tasting medicine, but don't worry, you'll get healthy eventually.
Yeah.
Americans don't want that. They want, they want the get rich quick scheme. They want, they don't want to exercise and diet. They want a cream that they can just rub on, a miracle cream to get rid of the cellulite or whatever. They don't want to actually. The inflation that we have today is not just because of what happened after COVID. I mean, we've been creating this inflation for, more than a decade. And we're just starting to feel, the beginning of it. It's going to get so much worse than what we've already experienced. This strong dollar is really hurting the rest of the world. It's helping America considerably, because if we didn't have a strong dollar, prices would be going up a lot more. Interest rates would have gone up a lot more. So the strength of the dollar is helping Americans, but it's hurting everybody else. I mean, it's our gain and it's their loss, because we're exporting a lot of our inflation to the rest of the world. Now, if the dollar was a normal currency, based on the economic fundamentals, the dollar would be tanking, but it's not, because it's still got the mystique of a safe haven. It's the reserve currency. And so the dollar keeps going up. And so Americans take those appreciated dollars and they go around the world and they buy stuff. They bid up prices, but we're not producing stuff. We have record trade deficits. So we're sucking goods out of the global economy, and we're not paying for them by putting goods into the global economy. We go to the world and we take all their stuff and we just give them paper. And now they don't have that stuff anymore. So the supply of stuff goes down outside the United States and it goes up inside the United States. So we get more stuff, so we have lower prices. The rest of the world has less stuff. They have higher prices. And so this is putting more downward pressure on their economies, on their bond markets. But at some point, this is going to break. Because at some point, the rising interest rates, so look, bond yields just hit new 14-year highs again today. The yields are now like 4.25 on the 10-year Treasury or 30-year Treasury. Mortgage rates are now probably 7.25. They'll be 8% by the end of the year, probably 10% by early next year. The Fed funds rate will move up to 5%, then 6%. There's no way that the nation can pay this interest. It's just too big a burden on the economy. There's too much debt. There's no way to service it. The national debt, 31 trillion. It's financed with short-term paper. A lot of that paper is rolling over in the next year, and it's going to go from 25 basis points to 450, 500 basis points. I mean, you're talking about a massive increase in the debt. By next year, the government's going to be spending well over $1 trillion a year just on interest on the national debt. We already have a $2 trillion deficit. I mean, these numbers are too big, but corporations can't finance the debt. State and local governments have got tons of debt. Individuals have record amounts of debt, record low savings, record high debt, credit card debt, auto loans, student loans, mortgage debt. So at some point, the Fed is going to turn its attention from inflation to this economic implosion, this financial crisis. And when that happens, the dollar is going to drop like a stone. And then inflation is going to take off. And then I think this whole process is going to escalate, because as the dollar really starts to fall and inflation really starts to rise, I mean, that's going to put up a lot of upward pressure on interest rates. And then the Fed's going to have to print even more money to buy even more bonds to stop the rates from rising. And as they do that, they just create more inflation, and they create even more selling in the bonds they're creating inflation to buy. So you get into this vicious circle. So, we've got a real sovereign debt and currency crisis coming. And this big rally in the dollar right now, this is just a head fake. I mean, this fact that people are buying the dollar is just allowing our problems to get worse, because we just go deeper into debt, borrow more money, and import more products.